Imagine this. Your daughter just got into a dream US university. You send 25 lakh for her fees, only to realize the bank just locked up a massive chunk of your savings. Welcome to This Explainer, where we're going to break down a hidden financial trap that catches so many families completely off guard. I mean, it's literally the proudest moment of your life, right? You log into your banking portal to pay that crucial first semester's tuition, you initiate a transfer for 25 lakh rupees, and finally, you breathe a huge sigh of relief. But then you check your bank statement and your jaw just hits the floor. The bank didn't just debit the 25 lakh. No, they deducted an additional, staggering 5 lakh as a tax right before the money even left India. And honestly, the worst part? Your CA never even mentioned this was coming. You were completely blindsided by a massive 20% upfront tax deduction. Okay, let's dive into this and figure out exactly what went wrong. Part 1. LRS and the TCS trap. Here is the 10-second breakdown. The Liberalized Remittance Scheme, or LRS, lets you send up to $250,000 abroad every single year. But here's the catch. Anything you send above a 7 lakh rupees baseline triggers TCS. That's tax collected at source, and it hits the exact moment you click transfer. Moving on to part 2, the aggregation surprise. Now, what's really interesting about this slide is how easily you can accidentally hit that 20% rate. See, your PAN card actually aggregates your LRS limit across all your banks and spending categories. So that family holiday to Europe, or maybe those US tech stocks you bought, yeah, those secretly ate right through your threshold. You combine that eaten up threshold with a generic transfer purpose code and bam, you accidentally trigger the maximum 20% penalty. Which brings us to Section 3, the education loan hack. Okay, here is the absolute ultimate workaround. Self-funding your child's education historically triggers a 5% TDCS right off the bat. But if you source those exact same funds through a recognized education loan, it legally slashes that upfront tax to just 0.5%. It is a completely massive difference. Let's look at Section 4, reclaiming your lummy. So the crucial point is this: that deducted money, it is absolutely not a sunk cost. TCS is essentially just a tax prepayment. That means you can simply claim it in your income tax return via Form 26AS for a full direct refund right back to your bank account. And finally, Section 5, 2026 budget updates. And this brilliantly illustrates the latest regulatory relief we're seeing. Starting in April 2025, the exemption threshold is raised to 10 lakh rupees. Then, jumping to April 2026, the self-funded education TCS rate is slashed to just 2%, while the education loan TCS rate plummets all the way to absolute zero. Look, navigating all these codes and limits can definitely feel pretty overwhelming, but getting it right is vital for keeping your cash exactly where it belongs. So if you want a step-by-step checklist to avoid this entire trap stress-free, just DM me LRS for a free TCS planning guide. The rules are definitely strict, but with the right strategy, you can completely turn a financial nightmare into a seamless transition. It really leaves you with one big question to think about. Are your family's global dreams structured to save you millions or cost you a fortune? Thanks for joining me for this explainer, and I'll catch you next time.